Welcome to the third program in our Clean Energy Funding series. The focus of this one is on businesses and workforce development. I'm Sherry Gruder. I'm convening the series. I'm a sustainable design specialist and energy strategist with UW-Madison Division of Extension in the Community Economic Development Program. I also manage the Energy on Wisconsin program. I'm joined today by our expert panel. When you registered, their bios were on the page if you want to refer to them again. Our first speaker will be John Clancy, who's with Godfrey & Kahn Law. He is their Energy Strategies Practice Group leader. Kimberly Johnston, who's the Market Development Director with Pace, Wisconsin, is another on our panel, and Leah Maggio with Focus on Energy, who's their Business and Industry Program Manager. We're going to talk to you today about the Inflation Reduction Act, or IRA, which provides nearly $400 billion over 10 years through a combination of tax credits, grants, and loan guarantees to rapidly advance the clean energy economy and sustainability and decrease carbon emissions while improving U.S. economic competitiveness and innovation. The stable and long-term incentives in IRA give businesses certainty to make long-term investments in the transition to clean energy, which is such a nice change given that it was every 2 years or year to year before, and it was decreasing amounts. So you don't have that to deal with anymore. Businesses are eligible for more than half of the $400 billion over 10 years to invest in energy efficiency, renewable energy, clean transportation, and manufacturing. If anyone hasn't muted, please do mute your line. Thank you. So in this webinar today, you will learn from our expert panel about the clean energy funding available from the federal government, but also in the state of Wisconsin, and how you can use both or many sets of funding toward your clean energy projects. You'll learn how to optimize your access to that funding and strategies to lower your tax liability. You're welcome to enter questions that you have into our chat. We have reserved time at the end of the program for our panelists to answer them. So we're going to start the program today with John Clancy from Godfrey & Kahn Law. Thank you, John.
Thank you very much, Sherry. As Sherry mentioned, I'm John Clancy. I'm the head of the energy team at Godfrey & Kahn, which is a law firm here in Wisconsin. And I'm going to try to share my screen, hopefully successfully here, first of all. And let's see, does that look right to you, Sherry, or is it not?
You're not in presentation mode.
Yeah, let me try that first and then see what happens here.
That's it. Oh,
is it we need to reverse the screen?
Now we have your notes again.
Yeah, we need to reverse screens too. Okay, so now we're there.
There we go. You got it.
Great, cool.
Thank you.
So as Sherry mentioned, I'll talk about the tax credits, some grants, and related programs under the IRA, including some stuff related to workforce issues, both requirements for prevailing wage and apprenticeships in certain situations, and then also funding that's coming in for training for workforce development. And I'll just kind of spin through these slides. There's a lot of stuff here, but I'll kind of speak at a 10,000 foot level here, I think, in general about what's available, because there's a lot available for business, as Sherry's noted. And I guess one thing to note is that Sherry mentioned $400 billion. There's actually potentially even more money available, because as I talk about the tax credits and certain other programs, a lot of those don't have any dollar limit on them. So if a project's done and qualifies, it gets the tax credits. There's certain ones that have dollar limits. I'll talk about that too, but there's a lot of flexibility here if you're pursuing clean energy projects for your business to get very significant tax credits and other benefits, some of which are essentially unlimited in terms of amounts overall. But I'll talk about that too. So this is an intro slide. The one big thing here is that the Inflation Reduction Act really makes a lot of ESG and sustainability goals of companies now much more feasible to pursue. We'll talk about it in more detail, but I think the purpose of the act, I think in large part, was to make it so beneficial to pursue these projects that you almost have to think about doing them if you have an interest in this area at all. And if you have ESG kind of goals or sustainability goals, that you'll be driven forward to do these kinds of projects, which I think is the intent of the act. It's also the intent of the act to really, develop a lot of utility scale projects as well. But I think for companies, there's a lot of opportunities now to meet your own particular goals in these areas too. One thing else I just wanted to point out is that a lot of these programs can be additional to other programs you might be getting money under, like for instance, for focus on energy funding, that's not necessarily limited by this. You could combine those two. Office of Energy and Innovation grants could potentially be used together too, especially with the tax credits. So if there's any other particular grants or funding you're able to get, you can most likely mix it in with this too and make your projects more cost effective as well. And then there's also a lot for clean energy businesses too here. If you're a developer of solar, let's say, or you're a company that produces energy efficiency or renewable energy components, there's a lot here for you as well. So we'll talk about that as well. The first thing I'll talk about in a fair amount of detail are the investment tax credits under the Inflation Reduction Act. I'm going to talk about in this section the ones that basically apply to clean energy projects that are built. There's also going to be other tax credits that apply to components for those projects and things like that, and I'll hit those later on. But this section is really going to focus in on what was really kind of a supercharging of what was available historically for solar, wind, and other renewable energy projects, but now has been expanded both in terms of coverage, what kind of projects are covered, and in the tax credit amount. So those of you that have looked at these kind of projects in the past are probably aware that there has historically been an investment tax credit out there. It's been one that's been slowly going down over time. Right now, if we didn't have this extension, we would, it was 26% when the act was passed, just before it was passed. It would have been down to 22% this year and then down to 10% in years after that for projects that began after this year. So basically what we have now is under the act is, in theory, a reduced base tax credit of 6%, but that jumps up to 30% if certain requirements are met. I think everybody's going to be incentivized to meet those requirements because it's such a big, higher tax credit because of this. And it's kind of driven in part because of the fact that this is a Democratic-only bill, that the kind of qualifier here is going to be that you either are exempt or you pay prevailing wages and have apprenticeships, basically. But the 30% tax credit is now, as you can see, is good on for a wide variety of projects. One key one is geothermal projects, which used to be the kind of geothermal we have in Wisconsin used to be a 10% credit. Now it's a 30% credit if you meet the criteria to go above the base. And then it also is available in lieu of the production tax credit for a wide variety of projects, including wind, biomass, landfill gas, stuff like that. It's also available for the interconnection property. So if you have to interconnect to the grid and do upgrades to the grid, and your project is below 5 megawatts AC, which is alternating current, then you also get the tax credit on the interconnection costs, which I'll talk about a little bit later on too. So the key issue, kind of key base issue to be thinking about is, how to make sure we get the 30% tax credit, which if your project's below a megawatt AC, you get automatically. You don't have to worry about prevailing wages or apprenticeship requirements. But if you're above that, then you have to think about those factors. And one thing to be aware of, though, is that the law makes clear that you could have multiple projects that would be grouped into one. So if you're doing solar at a bunch of sites for your company, and they're all really being done under one contract with the same installer and the same kind of other elements, you got to be a little careful to make sure you're not grouping too many projects together and then going over megawatt AC, especially if it costs a fair amount more to have prevailing wages and incorporated apprenticeships. Some entities are required in their plans to do that already anyway, so it may not be an issue for them. But it's a key issue to be thinking through and how you break up projects if you want to do that. But if you're above a megawatt AC, then you have to pay prevailing wages and meet apprenticeship requirements, unless your project began before January 28th, which is kind of a magic date based on when the IRS released the guidance, the initial guidance on apprenticeships and prevailing wages. So on the apprenticeship side of things, if your project began this year, for example, you need to have 12.5% of basically the jobs on the project be apprenticeship jobs, as opposed to like a journeyman or journey worker job. The idea is obviously here to train folks who create a real well-developed workforce throughout the country to work on these kinds of projects. And then probably the bigger issue, though, is probably prevailing wages, especially depending on how the difference is between how much the difference is between prevailing wages and kind of non-prevailing wages or just normal wages in your area. This covers both the construction of the facility and any alterations or repairs made during the first 5 years of operation. So you have to make sure that, if you're in this category, your contract makes clear the prevailing wages will apply to construction, and then especially in your O&M agreements, if you're going to have for any alteration or repairs during the first 5 years, that also has to be prevailing wages. So I think you need to make sure that the touchstones of prevailing wages are met in your contracts, so that and with penalties or liquidated damages, things like that, they cover things by the contractor if they're not met. So that's an important thing to be thinking about too. But then in addition to, again, typical things that have driven like solar and things like that, now the ITC covers other things too. I mentioned before geothermal, it's been up from 10% to 30%, but also storage devices, basically battery storage, and then microgrid controls are also covered separately. So you could add in, let's say, storage after you put solar on and still have the storage, get the tax credit, or you could add in storage without solar and get the tax credit if you're using it for peak shaving, stuff like that. So I think it's real important to be thinking about all these options, because especially when we get into the bonus credits, it may make sense to to put more in than you were thinking initially, because the price makes sense for storage and having a microgrid, stuff like that now. So I mentioned before the interconnection equipment can be covered, and the key issue here is that it can be covered regardless of who pays for it, because a lot of interconnection upgrades are made by the utility, not by the customer. So even if the utility pays for it, it can be covered under the tax credit, as long as it's not just a microgrid project, as long as it's solar, let's say it's solar or wind plus a battery storage, that would count. And then as long as it's not above 5 megawatts AC, which is, for those of you that, are involved in renewable energy projects now, you probably know 5 megawatts is pretty big. It's not big for a utility scale, it's not utility scale, but it's a big commercial scale project typically. And then what I want to talk about next was the ability to get enhanced credits. So in addition to the 30% that you can get is essentially kind of a base credit, as long as you're not above the threshold for prevailing wages or you have prevailing wages met, there's these bonus credits that are available. The first one to talk about is the 10% increase for domestic content being met, domestic content requirements being met. And that there's going to be guidance coming out of this soon from IRS, they said in a recent announcement. So hopefully this will be clarified a little bit more too. But the basics of it are that if you have kind of steel and iron that's not part of a manufactured product, so if this probably mostly comes into play for like a cogeneration facility or something like that, where you're actually taking essentially raw or steel, or taking steel and or iron and making it into something at the site to make, let's say, a boiler. That has to be 100% American made. And then for the manufactured product components, those have to be 40% of the cost have to be American made. There's a kind of an issue left to clarify on whether that means that you have to have at least 40% of the cost of components be 100% American made, or if you just have to have 40% on average of the cost American made. So that's the language of the statute's not perfect on that. You can read it probably both ways if you're kind of creative. So there's comments in on that topic, I know, and there's probably also comments in on perhaps waivers, the ability to get waivers of certain equipment, because the big issue is really for solar and battery storage and perhaps inverters, stuff like that. Historically, all that stuff has come historically, most of that stuff has come in from Asia and other locations that's not the United States. So it'll be, and there's just not enough American-made stuff to allow you to, for everybody that want to build American-made or domestic content containing facilities to do that in those areas. So that'll be another important issue to follow. So, but then the second add-on, so you can get a 10% add-on credit, so you can go to 40% credit, basically if you do meet the domestic content requirements. And there's a lot of technologies where it's probably easier to meet that. One might be geothermal, for example, because the components are oftentimes more available in the United States potentially than for solar. But the second add-on for another 10% bonus credit to get you again to 40% if you get the domestic content 2 to 50% is being what's called an energy community. Now, there's a couple different ways to meet that. One is if you're on a brownfield site. These is based on the definition they use in the statute, which is taken from CERCLA, which is the normal kind of federal environmental law that regulates cleanups basically of sites. It's basically for sites that are not in active remediation necessarily under a cleanup order under CERCLA, but have some issues or problems with the sites environmentally. There's various elements to go through to make sure your site meets those criteria, and there'll probably be guidance again on this one too on what meets and what doesn't. But if your company or organization has access to sites that might be a brownfield, let's say an old, a site that if you're an older site, you might have cleanups that have occurred. The site may be cleaned up to the level that it has to be under the environmental laws to get closure, but it's still considered a brownfield. This could be a great opportunity to put solar there or other technologies there to get the bonus credit. The next thing is that if you're in a census tract that includes or surrounds a census tract that had a coal-fired electric generation units retired after 2009, then you can also qualify for this. You could also be, if you're in an area where there was a coal mine closed, but there are no coal mines closed in Wisconsin. I won't focus on that quite so much. There's also one if you're in a fossil fuel driven economic area. Those areas will have to be kind of mapped out more. There may be some areas in Wisconsin, maybe northern Wisconsin, if there's a refinery close by, things like that. But those are mostly for areas like Texas and other areas that have a lot of fossil fuels, or maybe some parts of Illinois, for example. Then finally, there's a 10% or 20% bonus credit that's available in limited supply. There's total 1,800 megawatts DC that will get this each year in 2023, 2024, and then actually extending beyond that under a follow-up program, basically, for clean energy generally. But this is for wind or solar projects that could include battery storage, though, too, that are below 5 megawatts in size AC and that are located in a low-income community or on Indian lands. A low-income community would be like a community that are near a census tract that meets new market tax credit levels of poverty, basically. Or a 20% credit if it's a solar facility, let's say, or wind facility that directly serves low-income housing or that provides energy where at least 50% of the benefits of that energy go to low-income folks, basically. Each one has its own amount of allocation. The low-income community is 700 megawatts. Indian lands is 200 megawatts. Low-income residential building projects are 200 megawatts again, and the low-income economic benefit projects are 700 megawatts. So that'll, the ability to apply for that will be coming out first time probably this spring or summer. The first one's going to be the ones for the low-income residential and low-income economic benefit projects. But it's key to be thinking about that too, because what you want to think about, I think, is can we get 30% plus perhaps one of these 10% or even 20% or more of these? Perhaps some sites you could imagine you might get a 10% for domestic content, a 10% for meeting energy community, and perhaps even a 10% for being in a low-income community too. So you want to be thinking about how many of these credits can you stack up, because that'll pay for more and more of your project. So then also a key structuring issue that's allowed for now on the IRA is for companies, businesses to transfer the tax credits directly, basically to sell the tax credits rather than having to bring a partner in if you don't have enough tax liability. So one of the things to think about is that there's two basic tax benefits for a solar project or other energy project. One is the tax credits, The other is a depreciation benefit. So if you own the project, you own the solar facility, let's say, if your company, but you can absorb the depreciation and take advantage of that. But when you add on the tax credits, that's too much, basically, tax benefit compared to your tax liability. Instead of keeping the tax credit and not really fully utilizing it, you can sell it to somebody who can utilize it. There'll be a discounted rate for that sale. We're guessing it'll be about 10 to 15% of the tax credit amount, because just for that party coming in and taking them with the tax liability or the tax credit, there'll be some transaction costs, obviously, but it's not going to be a huge discount because the tax credit's available immediately the year after you put the project in play. So it's not like there's a time value of money discount involved either. So that's another key change to make it. They basically just want to encourage more folks to do these projects by making the tax credit much more usable. Then the next thing though too is that there's also, if the entity that'll own the facility is, let's say, a state or subdivision of a state or a tribe or a tax exempt, nonprofit type entity, then you should be able to take the tax credit directly, meaning you get direct payment of the tax credit. There's actually a legal fiction the statute includes, so that these entities that don't pay taxes are assumed to have overpaid their taxes, and they can file for a return, refund, file a return and get a refund of the amount of the tax credit. So that's also incredibly valuable for those entities. It also makes it so you want to think about who's the best entity to own a project. For these projects, is it better if you're working in partnership in a public-private arrangement with a public entity or a nonprofit, you may want them to own it because they can get the tax credit directly and you don't have to sell the tax credit. So that's the tax credit stuff. And then I wanted to kind of on a quick basis go through other funding available. There's a lot more money if you're in a rural area under this Rural Energy for America program. There's grants that there's $2 billion of funding for it. It's historically been out there, this program, but now the grants are up to 40%, and the maximum grant is $1 million for, let's say, a big solar project. So that can be very helpful too. I'm going to kind of keep moving along, but that's very helpful as well. There's also $27 billion that's set aside for this greenhouse gas reduction fund, where the money will go to either part of it's available to states and municipalities and tribes. The rest of it's available for nonprofits, but either way, that money is actually funnels through them to projects, to low carbon or zero carbon projects. And they're especially looking at funding public, community projects, but also public-private partnership projects. So this can be a great thing to be aware of. It's not out yet, but for funding to help fill in the remaining cost of the project that's beyond what you get for the tax credits and the depreciation. There's also a significant increase in tax deductions for building energy efficiency projects. And these are really, this program's been out there, the 179D, but they've significantly improved it now so that you can get a much bigger deduction, up to $5 per square foot, based on how much you make your building more efficient than Then there's a 2007 ASHRAE building uses as like kind of a standard building. So if you're 25% more efficient, you can get $2.50 up to $2.50 as an immediate deduction of your expenses on your heating, air conditioning, insulation, and lighting. And then as you get more efficient, you get up to $5 per square foot. This is all based on how much money you put in your building in that given year, but the caps have gone up a lot. So you can get immediate depreciation on building components that you normally would have to, depreciate over the life of the building. So it can make it a lot more cost effective to have these kinds of projects go forward. And then now I want to talk about some stuff that's on taxing, basically grants and tax credits for industrial facilities under the IRA. So in addition to everything else I talked about, there's significant money for heavy energy users that go green, basically. So if there's $5.5 billion for these advanced industrial technologies being put in place at basically energy intensive, commercial industrial operations, basically. And those can cover up to 50% of the cost of the project through a grant or a rebate or some kind of a cooperative agreement or loan agreement. And it's basically to put these improvements in at a wide variety of there's certain identified buildings, but then there's in general energy intensive industrial processes as determined by the Secretary of the Department of Energy. And these cover a wide variety of categories. They can be like normal energy efficiency or emission reduction projects. They can also be smart manufacturing projects. They can also be incorporating sustainable manufacturing into your operations. They can also be, using alternative materials to reduce emissions. They can also include, if you're developing net zero emission liquids or gaseous fuels, through your operations, or transportation related stuff, also carbon capture technologies, and just other technologies that help achieve net zero emissions. So you'd want to, if you're a high energy intensive facility and you're spending a lot of money on energy and you want to reduce that and you want funding to help you do that, this is an important thing to be aware of and start pursuing once it comes available. Same thing, there's a tax credit also. There's $10 billion in competitive 30% tax credits, 4 billion of which are reserved for basically those areas where the coal mines closed or the coal-fired power plants closed, and those census tracts that are where those are, or the surrounding census tracts. So if your company or your business is located there, you're going to cite a new business that's going to do this stuff, you might want to cite it there to get the chance to get these 30% tax credits. They've now put out the program, at least for a good chunk of the money. The concept papers, if you want to pursue this, are due July 31st, 2023. And then based on that, DOE decides whether to encourage you to submit an application. You have to submit both, the application and the, first the concept paper, then the application to be considered. And it covers basically 3 categories of stuff. If you're going to make equipment that's, relevant to like making solar, solar PV or solar thermal or wind components, turbines, stuff like that, or energy efficiency components, things like that, or carbon capture equipment, then you can apply for that for your equipment to make that other equipment. You can also get it if you're going to have a greenhouse gas reduction project of at least 20% of your greenhouse gases. And then finally, it can be if you have a facility that processes or refines or recycles critical minerals, especially things for like batteries, stuff like that. So if you're in any of those areas, you definitely want to think about this as well. It's a good opportunity to get, a lot of funding towards your project. And then there's finally the advanced manufacturing production credit. This is if you're going to produce certain types of equipment. It's got to be the right kind of equipment. There's different components. If you make solar cells or modules, for example, or inverters, then you'll get paid so much for each inverter or solar module or whatever that you create. So if you're in this area, it's very important to be aware of this if you're going to make these components, because it'll make you make more money per item you're producing. Then there's also, I'll skip over the EV because there's going to be a transportation meeting, I think in a week or two, or a seminar. And then I'm going to go right on to the workforce development stuff. So in this area, there's a lot of money flowing through to, and it's basically this, they're all in the same kind of thing, but they're targeting different recipients and where the money flows through, basically. So the first one is the energy auditor training. It's basically to provide training so individuals can be trained to conduct energy audits and surveys of commercial and residential buildings. And this will be $40 million that will flow through the states. And that will be used to cover the cost of the training that folks would get, as well as to pay wages to them as essentially trainees or apprentices, basically to be trained on the job about these about how to do energy audits. And you'll see on all these, or I think 3 out of the 4 of these slides, they're all things that are probably coming out later than DOE says. DOE says on its website this will be out the first quarter of 2023. Well, we're basically at the end of that, so I'm guessing it'll bleed out into the second quarter when it becomes available to states. But this could be real important to train individuals in the state of Wisconsin to become energy auditors. There's also $10 million available for career skills training. This would flow through to nonprofit partnerships, and it's basically paying the federal share of career skills training programs. Where folks get both classroom instruction and on-the-job training. And this again will come out, and this is for obtaining industry related certification to install energy efficient building technology. So folks that would install the energy efficiency equipment in buildings. And this is supposed to be out again, in the next couple of days, but it'll probably bleed out into next quarter. And there's also $10 million in grants that'll go to higher education institutions, so things like the University of Wisconsin system and folks like that can apply for these this funding basically to basically provide training to folks on things like training to be in engineering, architecture, stuff like that, to work on clean buildings basically, as well as to have research and development. So this is actually not that much funding when you think about it across the higher education institutions, but they'll get more funding in these areas as well. And then finally, there's the biggest source of funding is basically $200 million in grants to states that would then flow through to programs to provide training education to contractors so they can do home energy efficiency work and electrification improvements. So really, I think trying to convert the existing contractor force to have skills in these areas of energy efficiency and electrification. That includes funding folks that would work under what are these rebates this is another IRA program where there's a homes program, which is basically a whole home efficiency program where there's money that can flow through to homeowners, especially lower income homeowners to put in efficiency measures in their homes. And then there's this high efficiency electric home rebate program, which pays for a large portion or potentially all of the electrification in a home based on the income level of the individual that lives or owns the home. So it's to really, I think, supercharge this area to get a lot of folks trained to do this kind of work to really then obviously take a bite out of energy usage in homes. And it's the money can be used to reduce the cost of training the contractor employees. It can also be used for testing and certification, especially under the state programs that will be developed and implemented out of this grant program, and then also to partner with nonprofit organizations in the same area. So with that, it covered a lot. I think it covered quite a bit because there's a lot out there. But if what we're going to do, I think, is hold off for questions until afterwards. Hopefully, also just having this these materials will let you kind of come back to it later on and see what's out there. See, there's a lot out there and a lot that you can take advantage of.
Thank you so much, John. Really appreciate that. It was a lot of information in a short time. Our next speaker is Kim Johnston with PACE Wisconsin.
Thank you. I'm just going to get my slideshow set up here. Perfect. Hi, my name is Kim Johnston. I work with Slipstream. We're the administrator for the PACE Wisconsin program. Simply put, PACE Wisconsin is a property assessed financing mechanism for energy efficiency, water efficiency, renewable energy, and resiliency types of projects. You can finance 100% of the hard and soft costs of the projects. It's a non-recourse financing type of debt, which means that it frees up equity that you have for other priorities. It's also fixed rate. It lasts from 20 to 30 years, 30 years being on the high end, which would mean we save 30 years for solar. It can help yield a positive cash flow because it usually does offset the cost savings with the energy efficiency measures that you install. And it helps boost your property value when you're making these investments to your property. Currently, we are available in 53 counties throughout the state, along with the city of Milwaukee does have its own distinct program that we currently run too. As of yesterday, we've closed 87 projects in the state, which means $156 million in clean energy financing has been successfully implemented in these counties. The different types of commercial properties that are allowed under the program include healthcare facilities, industrial complexes, multifamily buildings, either market rate or low income, retail facilities, agricultural projects, hospitalities like skating rinks or hotels, not-for-profits like churches, office buildings, and mixed-use buildings. The different types of projects that are allowed include new construction projects, renovations, adaptive reuses, refinancing of previous debt within the last 30 months, or equipment installation. Now, the only thing that PACE doesn't work for in the state of Wisconsin's PACE program is residential PACE or government-owned buildings. This is a common list of energy and water efficiency measures that we usually see both in new construction or retrofits. A lot of lighting systems or building controls, tunable lighting, the whole building envelope, furnaces, boilers, or chillers, heat pumps, variable speed drives, low flow fixtures, heat recovery, and also covers fuel switching. It also has renewable energy component to the program. So you can finance solar PV, battery storage, biofuel, and wind. And in with the last 6 months, the state of Wisconsin also has expanded the PACE outreach to be able to include resiliency measures, along with stormwater and EV charging infrastructures for commercial properties. This is kind of an overview of how PACE sets with the normal debt stack. You can see that the normal mortgage lender will have some debt to the property. The PACE financing is for only the energy efficiency portions of that debt. And the owner may also have some equity that they choose to include in the debt stack. The average loan can last from 5 to 30 years. It is a fixed rate long-term type of debt, as I mentioned, and solar usually does max out at 30 years. The interest rate is set by the capital providers that currently participate in the program. We do have 26 eligible capital providers in the state. We're trying to add more on each week, actually. There is a number of regional, national, and local lenders for people to choose from. The loan sizes for the program vary from 100,000 up to 50 million. So there are projects that we've done like solar on an ice skating rink in Spooner, Wisconsin for around $125,000 to perhaps some of the Oscar Mayer redevelopment, which is closer to 15 million. The PACE to loan value does need to be anywhere from 5 to 35%. And we do have some rules specifically for the PACE program in the state. You do need to have your mortgage lender's consent to the PACE financing. There does need to be an energy assessment on the property. And the security or the securitization of the property is the property tax assessment. Also, the loan to cost, you can finance 100% of the hard and soft costs again. So that means that you can roll in any legal fees or your energy assessment into the loan too. This is another way of looking at how PACE can slip in and refinance perhaps a more expensive, what we call mezz debt or mezzanine financing. The PACE rate can be anywhere from 6 to 7% now. Rates have changed in the last month or two. And mezz debt is usually a much more expensive debt structure, which can run anywhere from 12 to 15%. So with that comparison, you can see that they would be saving millions of dollars over the 20-year span. And this is just a look at some of the projects that we've done. I think I have a couple minutes left. Both renovation and replacement, new construction and adaptive reuse. Again, these are loans anywhere from $250,000 up to several $1 million. And what we're seeing also is that we have new market segments starting to use the PACE product because it is green financing that they're allowed to use both building shell, lighting, low flow fixtures, heating systems. But it's a nice view of what looks to be the industrial office building, hospitality, and the senior market sector. And then lastly, the project center is how you get involved in the program. We can have you talk to someone on the phone or just go in directly into the project center just to get started. And I'm going to hand it over to our next speaker.
Thank you, Kim. Leah.
Hi. Is my screen? Oh, here we go.
No,
There. It is.
we need to go to full screen. There we go. Great.
Good.
Yes, thank you.
Excellent. Good afternoon, everyone. My name is Leah Maggio. I'm the program manager for Focus on Energy's Business and Industry program. So today I will give a brief overview of what Focus on Energy is and how it can be used to help businesses across the state in making energy efficiency improvements. Our primary way of doing that is through rebates and incentives directly for purchasing and installing energy efficient equipment. But we do also have a ton of resources, technical assistance, and ways to help businesses engage with their own energy usage and hopefully minimize it over their future. So first and foremost, Focus on Energy is a statewide program. So Wisconsin is a little bit unique in that instead of utilities operating their own programs individually, we work with most of the utilities, 107 of them across the state, to provide their customers with energy efficiency incentives. So it's not funded by taxpayer dollars, it's funded by utility dollars. And by participating in the program, you're able to reclaim some of that investment that you're knowing or unknowingly making each month as utility bills are paid. So again, financial incentives are a big piece of what we do, helping our customers lower their first cost, making energy efficient choices more affordable, and accelerating the adoption of new technologies and new ways to save energy. So in simple terms, we're assisting any kind of utility customer from a small single family homeowner all the way up to the largest of industrial facilities that we see in Wisconsin. What's unique about us, again, since we are a statewide program sponsored by 170 utilities, we're able to offer really unbiased opinions, assistance. We're not selling anything directly, so we don't have, our favorite brands to go with. And through that, we're able to evaluate energy usage, look at it with clear lenses, and really provide that expertise that a lot of customers are looking for right now. We have a team of energy advisors across the state that are ready to work with business customers, specifically is what I'm speaking on. We do have energy advisors dedicated to multifamily facilities, schools and government, agriculture, and very large industrial facilities as well. These schools and government and agriculture were featured in the first two sessions of this that you can refer to if you do work with those customers, or you are one of those customers. And through energy advisor support, again, that's somebody can come to your facility, do a walkthrough, make recommendations, provide energy saving estimates for implementing projects, help sponsor and help get started with an energy team if that's something that either you have and it needs support, or you don't have one and need to get started somewhere. So that's something that we really love to see happen within businesses. We do have a number of training resources to get acclimated with how can we save energy. Some of them are geared towards manufacturers, some might be geared towards commercial properties, or just simply a technology. Let's talk about smart lighting controls. Let's talk about, improving ventilation systems, things like that. The incentives and rebates that we have are broken into two different categories or kind of paths to participation. The most common one is called prescriptive rebates that are a set dollar amount for purchasing and installing energy efficient equipment. So these are typically the one-for-one replacements. For example, replacing a lighting fixture with an LED fixture, replacing a boiler. And through those, we publish each year what those rates are. So customer can either ask us first, will this qualify, and we can green light it, or after the fact, they can let us know that they've recently purchased something within 60 days. And if it's eligible, send us your invoice for it and we will send you an incentive check. So it's a very smooth process. All of the catalogs can be found at focusonenergy.com/catalogs, and they're broken out by technology type. So lighting, HVAC, process, commercial refrigeration, etc. For improvements that aren't one-for-one, we have a custom incentive path. These are typical for Again, if something isn't one for one, or if it's maybe a unique technology like we see with process improvements in manufacturing facilities. And in these instances, our energy advisors will work with you to calculate the first year energy savings. And based upon what we estimate that improvement will save, the custom incentive is assigned or calculated based on how much electricity or natural gas is being saved. These do require pre-approval before anything is purchased, so please contact us immediately if you think you may have a custom project on your hands. The sooner we can get involved, the better, and in most cases, the more incentive dollars may be available if we're able to capture design elements before they're set in motion. Excuse me. We also have custom incentives for renewable energy resources, which include biogas, biomass, solar thermal, and wind. Similar to the standard custom incentives, the rate is also based on first year energy savings. They still require pre-approval and all of that, so please let us know before anything's purchased. For solar photovoltaic systems, solar PV systems, these are more like the prescriptive incentives, where the incentive is based off of the size of the array. So these ones are not calculated by our staff, and they can be applied for and pre-approved before as well. We also have feasibility study incentives for biogas and biomass facilities before those can even be conceptualized. Oftentimes customers need help in quantifying how much they may be able to save or generate with a system like that. So we will cost share up to $15,000 of a study for those facility types. A few other special offerings that we have. Practical energy management is a new one this year that I'm really excited about. This provides direct support for establishing and executing an energy management plan. And it also provides incentives for regular benchmarking. So if you're a customer who maybe doesn't know where to start, maybe has an energy team that needs direction, this provides a simple 6-step process with energy advisor support to get a plan put in place and make sure that it's being executed. We also have incentives available for whole building optimization, which boils down to making improvements to existing building systems, either tune-up type measures or control system changes. So whole building tune-up is great for customers who know what they need to do. They maybe have an outdated schedule in their automation system, and they need to have that reprogrammed to reflect their current operating patterns. That's something that we can help provide an incentive for. Retro commissioning is for customers who maybe don't know where to start with that, and they need to have their facility audited by an engineering firm. So in these cases, an audit's conducted to identify measures, and you're provided with an audit report that summarizes what you can do to save energy and gives kind of your system a whole checkup across the board. Specific for manufacturing facilities, we have a project assessment incentive. This is something that can be used to either a really obscure type of technology that we as a program don't have the ability to estimate energy savings for, or some sort of process improvement that maybe requires a deep dive into understanding where those energy savings are coming from. So project assessment incentives are a great way for those customers to uncover what the actual savings may be to decide if it's a good project to pursue. So we will cost share up to $7,500 of a study to have that, to conduct that study. And coming soon, hopefully off the ground in April, we're starting an industrial staffing grant program that will help to provide industrial customers who may have limited staff bandwidth, competing priorities, with additional incentives through a grant to prioritize energy efficiency. So again, we do have energy advisors across the state who specialize in identifying energy saving opportunities, making recommendations for improvement, helping to formulate an energy management plan or bolster one that may be already existing. We can calculate energy savings and provide you with options of, here's, if you do this, here's how much you could expect to save and so forth. We can also help you with the paperwork for the application process. We never want someone not to participate simply because they don't have time to do the paperwork. So we're always ready to help with that. And we're always happy to work with contractors too. We manage the Trade Ally network across the state. So the contractors and manufacturers and distributors of energy efficient equipment. So we're always more than happy to work directly with your contractor in order to keep projects moving. We have a number of on-demand trainings as well as live webinars that we conduct throughout the year. Both can be found at focusonenergy.com/training. Great resources. We have very, very, very good presenters who are subject matter experts and can really provide a lot of helpful information in getting started with an energy management plan. So now's my question slide. I think I am the last one.
Yes.
So if there,
Thank you, Leah.
thank you. I can stop sharing here.
Okay, great. So what we're going to do now is we're going to answer your questions. And I want to, because this came up several times, I want to let everyone know again, in case you came on later in the program, that we are going to, as soon as this program is over, anyone who's registered for it will get an email with a link to a web page that's just for this program, and it will contain our speakers' PowerPoints. It will also contain resources and links for you to get to things that they talked about and things that they didn't talk about. And we will have the program recording on there as soon as we get it back, but we do have it closed captioned, so it does take us a while to get that on, but check back and you'll be able to listen to it again. And you're welcome to share the link and the resources with anyone in your business or anyone else you can think of. So with that, why don't we get to the questions right away? The first one's from my colleague, Tim Bay. John, will the 50% basis reduction continue throughout the Act's tenor for all eligible assets?
The 50% basis reduction. Oh, I think you're talking about the, so when you get an investment tax credit, let's say you get a 30% investment tax credit, the basis you'd have if you paid for the project yourself, let's say it's a $100 project, would be reduced by $15 to be 50% of the value of the tax credit. So that does remain. So what it does, it allows for a somewhat less depreciation benefit, but in return you get a tax credit. You get basically a double that in tax credit, which is worth a lot more than the depreciation benefit. The depreciation benefit, just making sure it's clear, everybody, is, is based on your tax rate. So it's, you have a 30% tax rate, it's 30% of the value of the tax credit for the same amount of basis. So it is a somewhat reduction in the basis, and the basis could go down, a little bit more here. If you get say a 50% tax credit, then it'll be a 25% reduction of basis. But again, you'd have already 50% of your project paid for by the tax credit, plus you'd have some depreciation as well, plus any grants you can get.
Great. Someone also asked while you were speaking, John, so I assume that's where we're at here. Is the credit for photovoltaic solar or for solar and thermal energy storage as well?
It's for both, actually. Great question. So it is a credit for both solar PV and for solar thermal, and there's also credits for this storage, both thermal and electrical storage.
Okay. We have a question. Are there any credits for updating a commercial building envelope and conserving energy without adding non-fossil energy source?
Yeah, so
Definitely. Go ahead.
I guess two things stand out there, and others can speak to this too. I guess one is what I mentioned before, the 179D deduction. So you could get a tax deduction. So it's really, if you put $100,000 of envelope kind of work in your building in a given year, you could get and as long as you don't exceed the up to $5 per square foot, you could receive an immediate depreciation of that, which could, be worth, it's worth whatever your tax rate is basically in that depreciation benefit. And then you could also get, as it was talked about just right now, you could just before this open question area discussion, folks on energy could also provide you, incentives for that as well. And then you could also look for any other available programs. There could be other programs through federal grants, stuff like that, to probably just check out and be aware. But those are the two big things that stand out to me right now.
Yes. And Leah, did you want to, you already talked about the fact that Focus on Energy does provide that. And I was interested in the fact that you said that Focus will provide retro commissioning. And do you actually provide the service? Do you provide a rebate from the engineer that does the retro commissioning? How does that work?
Yeah, so we maintain a list of trade allies who would either be engineering firms, primarily could be a controls firm as well, who are educated on the program that do conduct the audit. From that, the customer can pick, whomever they'd like to work with. We just require that service provider to go through training to be up to speed on what the program considers for retro commissioning. After that takes place, our incentive is based off of the size of the facility. So a minimum incentive of 10 cents per square foot can be paid directly to the customer or to the trade ally who did it. And that the requirement for that is simply that you've had an audit done and you implement the energy saving measures that were identified in the audit.
And Kim, there's funding also through PACE, commercial PACE for that as well, right?
There is. So what IRA doesn't cover, you could use clean energy updates and green financing to fund.
Super. Yeah, so there's so many options out there. I also want to ask a quick question just because Kim, you had mentioned about fuel switching, but I don't know that everybody knows what that is. And I just want to say that it's a very important thing for people to understand that when you're upgrading your buildings, what we're trying to do with all of this federal and state funding is to move people to clean energy. We have a state goal, we have federal goals, many communities have goals, many businesses have goals. And in order to do that, we need to get off of fossil fuel energy. So what fuel switching is about is moving from natural gas, for instance, or propane to electricity. And that's because at some point, all of our major utilities have said that they're going to move to clean energy, and they are switching to wind and solar as opposed to coal. So what fuel switching is getting you to move your equipment to use electricity. So we don't want you replacing a fuel boiler, for instance, but move to another way of, heating. And so Focus on Energy doesn't specifically have a program for that now, but they're working on it. And you can do that through CPACE.
Mm-hmm.
Any other comments from anybody on that? Okay. So someone asked, is the 4 stories or taller 179D applicable to all commercial buildings or only multifamily? John, that's you.
Yeah, it's only the multifamily. Maybe it should be clear in the slide, and I was actually going through quickly there on that section, but yeah, it's commercial, or if it's residential, it has to be 4 stories or more.
Great. I just want to point out to everyone, since we need to wrap up, that the link to the series and today's program is actually in the chat right now, so you can click on that and look at it afterwards. I want to thank all of our sponsors for these programs. Godfrey and Kahn Law, PACE Wisconsin, and Focus on Energy. For this one, the Office of Energy Innovation, the Wisconsin Office of Sustainability and Clean Energy, USDA Rural Development, Dane County Office of Energy and Climate Change, the Coolyard Solar Foundation, Midwest Renewable Energy Association, and Wisconsin Clean Cities. I also, John had mentioned, the next program in the series is on clean transportation. That's on April 11th. So many of you also, aside from working on your buildings, which are responsible for about 42% of our greenhouse gas emissions, by the way, and transportation is the other biggest chunk of our greenhouse gas emissions. So we're doing a program specifically on that on April 11th. We hope you'll join us. And then we're doing a program on residential. So everybody lives in a house or an apartment, and we hope you'll join us for that one too on May 23rd. Okay, so I want to thank Brandon Hofstede, who manages our Community Economic Development Program, for helping to run this, and Lori Lundquist, who's our administrative assistant and also helped with this program. And thank you everyone for joining us. And our speakers are willing to work with you and talk with you, and their contact information will be on that webpage as well. So it was a great program. Thank you, everyone. And we hope to see you in the next one, April 11th.